If you understand this concept in the next 20 minutes, guarantee you, your life in investments is going to change. How many of you people you actually feel that your portfolio in which you have invested all your investments is crash proof or crash exposed? Hi, this is Anirudh Bellare here. Welcome to the 44th video of Your Best Financial Life series. In today's video, you will be learning this thumbnail which you saw of mine before clicking this YouTube video was market proof diversification, right? And that is the correct thing which you have clicked for your best life, because remember, this video will teach you the ideal mindset on how you need to position yourself when it comes to investments. Now, what do I mean by position? You will be understanding the concept here with the first point. So let's move on to the first point. Now you would have noticed whenever there is something called a market crash. Now what do I mean by this term market crash over here? That is when you have any activity, any geopolitical tension or your COVID which happened in the year 2020 that creates a lot of uncertainty and shock, because of which your stock markets correct to a very large extent. For example, as I gave you the COVID one. So what I mentioned over here is market crash. Now, usually what happens, if you would have seen this image over here. Now say example, you have seen a lot of bricks together. If you have seen a lot of bricks together, bricks as in, how do I say that, cemented blocks. If you keep them one above the other which are of different shapes, like say example, I keep drawing shapes and whatever, there will be eventually a point over here whereby all your bricks will eventually start to fall one by one. Now how can I relate bricks with your investment concept? See, that is the exact same thing which I'm telling you. Whether you invest your money in only equities or only in commodities or only in real estate, what happens if there is any sort of geopolitical risk or whatever which happens, it will be shown in your portfolio. See, I have gone through all of this problem in my life. Not a problem, you can say this is a learning, and I don't want you to go through the same issue which I went, and that is the sole reason why I am coming on camera for you. For me to explain this video to you, I have given you this example over here. Now what can be done? So this is the problem, that whereby your bricks slowly start to fall in any type of panic situation, and here is where there is something called diversification. As I mentioned, the crash proof portfolio, right? Now what is this diversification thing over here? You basically choose something called you have one portion of your money invested in equities, one portion in commodities, one portion in gold, silver, and one portion in REIT. Now what is the meaning of this word REIT? Real Estate Investment Trusts. For those of you who actually don't invest in land, you can buy a portion of that company through your Demat account, which is called your Real Estate Investment Trust. And see, this is not a promotion for real estate investment trust. This is just an option which you are having if at all you need to buy. Now, remember, not a lot of people understand the meaning of the word diversification. People usually think buying, say for example, this is no investment advice over here, buying any mutual fund, not any, you buy 10 to 12 type of mutual funds and mentally you feel satisfied that you are diversified. But do you know what, my friend? people who just enter the investment market without any research, study, or consultation from their financial advisor usually do this mistake. But the actual learning over here is that, like you have seen in our Indian markets, we have something called the Nifty 50. That is your top 50 companies of India and your Sensex. So your Nifty 50, usually these mutual funds invest in the top 50 companies or more of the other companies. Now, if you buy 10 or 12 mutual funds, it's like telling you're buying the same Nifty 50 with a little bit modification of companies. As a result, what happens? You will see almost a similar result when there is any geopolitical tension. It will be reflected in your portfolio, and this is what actually happens here. Now, as I mentioned here, I forgot to add the word bond. Now you have one area for bond. Yeah. Now, if you actually go this way, you will understand that going by this way, what is this way? You invest in different type of asset classes so that you are mentally more structured and better whenever you open your portfolio in terms of downturn. It will not harm your sleep at night, because see, there is no point of any investment or any growth related stuff when it comes to you not being able to sleep peacefully, and that hampers the part of your growth, which I don't want for you. And that is the main reason why I'm mentioning about this. Now, as I gave you this brick example over here, that the brick will eventually fall off. Now, why will this fall off? As I told you, the uncertainty. What can be an uncertainty? Say this is a lightning over here, or this is an earthquake, which could cause eventual problem over here. But whereas if you have bricks which are solidified with different investments, this will eventually protect you in that current scenario. Now, if you ask me what I have been doing to be the most authentic person right now in the front of the camera, I will actually tell you what I was doing. I was investing only in equities. Now, there is a reason for it. Now, see, right now, my family, they also invest and they have diversified. As a result, what happens? Me, as a 23-year-old, I can take much more risk compared to my family because of my age and my financial profile. And that is the sole reason why I invest in equities. If you ask me personally, as of now, I have not gone the diversified way because, as I have told you, my family is doing it. Now, if the other family member, that is myself, if I do the same thing, then it will be like you're seeing almost a similar result in your family's portfolio. My family is different and me different, considered different as in terms of investments. Otherwise, everything is same, only chill. So that is the point. So it also depends. See, remember, depending on your financial profile, your risk profile, your age, and whatever you choose to do is what will eventually give you growth. And that is why I am actually revealing what I am doing here. But if you feel that diversification is correct for you, you need to understand this point, as I mentioned here, that if you buy any related mutual fund or whatever, no investment advice, you need to understand that it is more or less you buying in similar companies, whereby you have different types of, just giving an example, mutual fund, because I invest in them. You have something called your large cap, whereby that particular fund house invests in large companies. Then you have your mid cap, mid sized, like you have market capitalizations when it comes to investments. Then you have your small cap, flexi cap, and multi cap and hybrid funds. And there are more funds like arbitrage funds and all of those. These are just examples. Okay. Now, before moving on to the next point, you can ensure that you take a picture or a screenshot of this, or you can actually start understanding about what I have said, which will give you deep impact when it comes to your investments. And also, I'm extremely sorry if I'm not telling you what the name of any stock or mutual fund, because remember, I'm not allowed to tell all of this. If I was a SEBI registered financial advisor right over here, I would have considered telling you. But I'm extremely sorry I cannot tell you. That is the sole reason I keep telling you. Please go to your financial advisor. Like, try understanding. If you have a health problem in your body, it is pretty advisory to visit your doctor, right? Now, if you don't visit your doctor and you feel that you can take care of yourself, with time that health problem will start worsening. The exact same thing when it comes to investments. You may feel, whatever field you are in your career, you may feel that investments is easy. But do you know what? A human brain is always a failed investor. And do you want to know the reason behind this? It's pretty obvious, because we human beings are emotional beings. There are a lot of people who react to emotions, including me. Chill. But with time, if you know how to manage and control them, you can eventually see growth. And that is why I'm repeating this. Your financial advisor or your doctor, anything related, whether it's your body or your investments, always advisable to consult them. And no compromise in that. Let's move on to the next point. Now, your next point over here, which I'm giving you, is something called start with the goal. Now, what is start with the goal? See, just a second. See, start with the goal over here means, I'll just write goal down. Goal start, not asset. You may be asking me, as I mentioned, you might be having the money right now to invest, but you don't know where to invest. And the real problem starts from now. Do you want to know what is the real problem? It is, you need to be extremely clear on your goal, on why are you actually diversifying or buying any asset class in the first place. You need to be very clear, as I have mentioned. Like, if you ask me, my goal, obviously in the long run, is to buy something I love. And I love the car Rolls Royce. And I know it's very extremely costly. And right now, I very well know I cannot afford an extremely costly vehicle. But it's a nice goal and ambition to keep, whereby you actually start your backward planning, and that is what I want for you. Maybe your goal is something else. Maybe it is to travel to Europe or wherever. That is why having the goal clear in the mind will actually start you to make those small proceeding steps, which will eventually start taking you to your financial dream. Now see, your financial dream could be achieved, could not be achieved, but at least it has started. You may not know your future, but in the current, you very well know where you stand. If you actually have to compare yourself, do you know what, my friend? You should ask your current self. Right now, you are in June seeing this video. You need to ask yourself how you were in the last year of June, whether your financial net worth has actually increased or it has started increasing, or what is the scenario. because keeping a check on that will eventually start, keeping the ball rolling for you to reach that financial dream of yours, despite your age, whatever financial dream you have. Even if you manifest it and start taking those small steps, it will eventually start helping you. And that is why I said focus on the goal. The goal is your starting priority. And then what happens? Then comes your asset class. That's why I said not asset. Not asset in the sense, keep your goal as main priority and then keep what type of asset class. And accordingly, you can do your research or sit with your financial advisor and go through what type of asset class you want, whether you want a real estate investment trust whereby you get slow dividends on a quarterly basis as the company declares its financial results, or you want to invest in something like gold or silver whereby if there is any geopolitical crisis, eventually this gold or silver will protect your portfolio, or your commodities, whatever you invest in, or your equities or bonds. It is all depending on you and your decisions. That's why it becomes extremely important here to identify your goals. See, it's easy for me to tell, but at least start, my friend. Just start it. Even if you write it down in your phone, on the notes page or on your Excel sheet or wherever you write, start. Get the thought. If you ask me, the thought was the reason why I'm coming on camera now. And see, I've reached my 44th video. It's not a comparison. Don't take me wrong. But at least I've started. The same thing. I want the best for your financial life. And that is why I keep coming here every Wednesday and every Sunday for you. Let's move on to the next point. You have something called the simple act of discipline and resilience, not prediction. See, discipline plus resilience. Not prediction. Now, what do I mean by this simple act of discipline plus resilience, not prediction? See, as I mentioned, June 2026, right now you're viewing this video. Even if you start your ball to roll, now what is ball to roll? You start off with your investments. The same June 2027, the next year, if you are actually consistent and disciplined that yes, I will be persistent with my goals, I as in you, and you actually keep the ball rolling by automating your investments, or you don't want to automate, you actually see, allocate, decide where your bonuses come from and accordingly you invest. And then if you stick on to the plan and keep patience, with time you will at least see little results. Now see, coming to the point over here, if you ask me, in June 2024, after the elections in India, my portfolio was up 35%. And right now, this is with mutual fund, personal. This is not any investment advice. Again, I'm telling. Right now, if you see June 2026, 2 years later, that 35% which I had, right now it is at 2.10%. That is almost a 33% of dropped returns. Now see, I'm not telling this to, flaunt or be excited or to tell these are my returns. No, this is an understanding. When your returns are extremely at the top, good. When it is not doing well, good. It is a learning phase for you and an accumulation phase whereby you start increasing the amount of money you put in your investments. At least little bit, even if an additional 2000 rupees or whatever will be useful for you, right? That is why I say Let the results be whatever. Results as in your percentage results. It depends on you. Now, once your financial goal number is hit, it's pretty obvious. You can either use systematic withdrawal plan to remove a bit of your investments monthly, or you can remove a chunk of your portfolio. It solely depends on you. This is why I say discipline plus resilience, the act of not giving up, will eventually lead you not to keep predicting and to keep destroying your mental peace, because I know you will be very focused on your career right now, and this should be something whereby it can help you achieve all those money related issues which you had in your past, so that in the future it will ensure that you live your best financial life in the present and in the future. That is why I have come out with this point for you. Thank you so much for viewing this video till the end. If you really got a lot of value from this video, you can do share it to a lot of people. As remember, not a remembering face. This is a motivation for me to come up on the camera, because I want every student or every person to be financially educated, which are not taught with lot of focus and understanding in schools and colleges. That's why I'm here every Wednesday and Sunday for you. Thank you so much once again.